Good afternoon, ladies and gentlemen. Welcome to our Unlock the Stock event. These monthly sessions are specifically formulated for retail investors to gain access to corporate management and get to know them and their companies better. This event is proudly sponsored by Kuda, an insurance and FX services group. Kuda has made a significant footprint in their niche markets, specifically bloodstocks, pools, and game. Kuda has meticulously built the company into being South Africa's leading luxury lifestyle insurer and foreign exchange service provider. Visit their website www.kuda.co.za to meet the team and read more about the services they offer. Our hosts will be the Finance Ghost and Mark Tobin from Coffee Microcaps, and they will be facilitating the breakout rooms at the end of the presentation session of this event. We would like to welcome Mpact, represented by Bruce Strong, CEO, Rech, CFO, and Valeska Keyter, Group Head Innovation, Research and Development of Mpact, and TWK Investments, represented by Andre Myburgh, Managing Director, and Eddie Fivers, Financial Director. Before we commence, a couple of housekeeping rules. Each company will do a presentation of 12 minutes each. Thereafter, you will see a button on the bottom of your screen where you can select which breakout room you would like to join to ask questions to management. You are more than welcome to leave the one room and join the other room by making a selection by using the breakaway room function. Please note that you will only be allowed to post your questions by typing them into the chat function at the bottom of your screen. Please also note that this event is being recorded and will be available on Keyter Investor Solutions YouTube channel, as are the past Unlock the Stock events, so be sure and subscribe to this channel. Once in the breakout room, you will see an email address if you would like to be added to that company's distribution list. I now hand you over to Bruce Strong, CEO of Mpact.
Thank you, Marlies.
Take, make, dispose. That's how a linear economy works. It's not how we work. We believe that what we make should be collected, recycled, and made again. It's good business that's good for the environment, good for the economy, good for our communities, and good for the world, leading the way towards a circular economy. Mpact.
Good afternoon, everyone, and thank you for taking the time to join us on this call this afternoon. My name is Bruce Strong, and I'm joined by our CFO, Rech, and Valeska Keyter, our Group Head of Innovation, Research and Development. I just want to fix my screen up a bit here. Sorry, just a sec. Just give me a right, get my way here. Mpact is the largest paper and plastics packaging and recycling business in Southern Africa. In 2021, the group generated revenue of 12.4 billion rand, with approximately 75% of that coming from the paper business and 25% from the plastics business. In the paper business, we collect waste paper to make paper packaging. Our paper packaging products include corrugated boxes and paper bags for export fruit, home deliveries, and retail applications, among many others. This forms the basis of our integrated business model, which gives effect to the circular economy. In the plastics business, we make plastic packaging for food, beverages, personal care, and home care products, much of which is collected after use by Mpact Recycling to be processed and made into new products. We also make returnable plastic bins and crates, which we collect from customers at the end of their lives, chip them up, and process them to make new bins and crates, thereby closing the loop on plastic packaging as well. Besides closing the loop through our integrated business model, we have also developed other systems of advantage which position the group well in the markets we serve. Take, for example, fruit packaging. If we look at this slide over here, Mpact produces a corrugated box which is used to package fruit. Inside the corrugated box, we can put a plastic punnet, which we produce. But in the recent past, customers have really sought after or looked for alternatives to those plastic punnets. And so today we're able to offer them paper or corrugated punnets. We're able to offer a paper bag as a replacement to a punnet. And we also are able to offer an alternative to a corrugated box in the form of a plastic crate, a lightweight collapsible crate, or otherwise a returnable crate. In addition, we produce these jumbo bins, which are used by fruit producers to transport fruit and other fresh produce from the vineyard or the orchard to the pack house. And an example of where you might sort of think, well, selling all these products into the fruit sector, we'd bundle them and that would mean more volumes. But we actually don't believe in selling bundled products or bundled group of products to customers. The benefit of servicing all these sectors is that we've got great insight into the needs of our customers in these sectors. We produce these pallets, for example. A good example of this insight is demonstrated through a project we did 3 or 4 years ago in these jumbo bins. This jumbo bin specifically is made for the South African market with South African dimensions and sizes, which are different to European sizes. Interestingly, the European market for jumbo bins is probably up to 10 times bigger than the South African market for jumbo bins. And so what we did 4 or so years ago is we put in a mold to make a European sized jumbo bin. And what we do today is we rent the jumbo bin to our fruit producing customers in South Africa. They put their apples or pears in the jumbo bin, put it in a container and ship it off to Europe. And in Europe, we pick up the jumbo bin and we sell it. Another good example of solving a problem for a customer through the insights that we get in terms of this entire value chain. Making the pallets now, which we are making for air freight shipping and all of that, we're also able to offer now many more interesting solutions. And Valeska can share some of those examples of our innovation efforts focused on further enhancing our position in the sector at the end of the presentation during the Q&A. Our oldest operation has been around for over 100 years, and Mpact has been recycling in South Africa for at least 40 years. We have a well-established track record as a lead in extended producer responsibility, developed long before EPR came into focus globally. Over the years, the group has shown tremendous resilience, firmly anchored in our purpose of providing our customers with innovative, sustainable packaging, giving effect to the circular economy through our integrated business model, and making a difference in the communities where we operate. More recently, we have successfully navigated the challenging business environment. In 2020, group revenue increased to 12.4 billion rand, underlying operating profit to 948 million rand, and underlying earnings per share to 3.60 rand, with a return on capital employed of 17.8%. The group has a very strong balance sheet with gearing of 29%, even after a very successful share buyback and significant investments in growth projects. Our strategy is based on 3 key pillars. Those are customer focus, leading market positions, and a focus on performance. Put differently, these are about putting customers first, being the best at what we do, and making a decent profit decently, a phrase we borrowed from Phil Knight of Nike. Our strategic pillars form the basis for evaluating opportunities across the group. Listed under each of these pillars, you'll see the criteria we use to evaluate these opportunities and direct our investments, energy, and other resources. We're fortunate to be in sectors of the economy that are growing and which to some extent are less dependent for their success on consumer spending in South Africa over the short to medium term. For example, packaging for exported fruit, which is projected to grow well above GDP over the next 5 to 10 years, based on the new plantings that are already in. We're also benefiting from the move towards more sustainable packaging, which is exactly what we produce. Another example of a growth sector is wheelie bins, which are sold to municipalities for refuse removal. Many of you may not know that up to 40% of households in South Africa are still not adequately serviced with refuse removal, which is a key objective for municipalities across the country. We are the largest producer of wheelie bins in South Africa. Then we have a growth area that many of you will be familiar with. That is convenient shopping and e-commerce, which are driving the need for paper bags and boxes for home deliveries. Not only do we make the bags and the boxes, but we also make the paper that is used to make those bags and boxes. But that's not all. That paper is made from the waste paper we collect across the country through our recycling business, often from the wheelie bins that we also make, thereby closing the loop and driving sustainability. During 2021, Impact's board approved over 700 million rand in new capital investment projects to take advantage of these growth opportunities and to ensure the resilience and sustainability of our operations. These projects include new facilities, new technology, plant, equipment, and solar power. Some of them are summarized in the attached slides for you to review it at your leisure, and this presentation will be available on our website in the next couple of minutes. So you'll see, many of you may have seen these slides already, but these just summarize the various projects, and the top sort of left side of the block just shows how this particular project relates to one of the three elements of the purpose that we mentioned. So this is in our plastic containers business to produce more bins and crates. This is a recycling plant for those bins and crates. This is our paper recycling business, where we're building a facility down in KZN. This is a facility in the recycling business we finished at the end of 2020 up in Gauteng distribution center. Here we've got some investments in our converting capabilities in our paper business, which are extensive and are really exciting. In our paper bag business, our printing capabilities have been enhanced in the recent past. We built a new chemical plant at our Piet factory to process some of the byproducts, a project that was done as a black industrialist project very successfully. And then, of course, solar power, where we already close to 5 megawatts. By the end of the year, we'll be at 10 megawatts. And our objective is by 2027 to be up to 25 megawatts of solar power across our group. And then, of course, we've got our foundation trust, which is investing in the future of the children of our employees as well. Innovation is a cornerstone of Impact's business. Our investments in research and development allow us to identify new ways to meet customers' needs, improve their offerings, and contribute to the circular economy. Our focus areas include developing our systems of advantage, packaging for the circular economy, and new products for existing and new markets. Our efforts in this regard have been widely recognized through a number of external awards. Mpact received 7 product design awards at the 2021 IPSA Goldpack Awards, including the prestigious Goldpack Trophy, recognizing Petzorb, which is shown in the middle of the screen, as the overall winner. A number of other awards were also received from the South African Plastic Recycling Organization and other external organizations which have recognized our innovation efforts. The group was also first to market with paper alternatives to single-use plastic fruit punnets. Many of you will be familiar with our fresh packed punnets, which have been enthusiastically adopted by our customers and leading retailers such as Woolworths in the recent past. In conclusion, Mpact has an experienced management team with a track record in driving customer-focused growth, innovation, and sustainability, building on the group's integrated business model, which is uniquely focused on closing the loop in paper and plastic packaging, contributing to the circular economy and benefiting society. Thank you very much for listening. Brett Baleska and I would be happy to take your questions in the breakout room after the presentations. Thank you.
Thank you, Bruce. I now hand over to Andre and Eddie of TWK.
Good day from TWK. My name is Andre Myburgh, and I'm also glad that you are here to listen to what we have to present today. And it's really a privilege to tell you about a little bit more about TWK. Just a quick background of where did TWK come from. TWK was formed in June 1940 as the Transvaal Wattle Growers Cooperative Agricultural Company. It was registered, and then in 1st September 2014, the company was restructured into its current form, namely TWK Agricultural Holdings as the ultimate holdings company, in TWK Investments, that's also now the listing entity. In June 2017, TWK Investment listed on the Rech Stock Exchange with a share price of R12.35 and a market cap of 433 million. Recently, TWK again listed on the Keyter Stock Exchange. That was 1st September 2021 with a share price of 35 rands, and with also listed on A2X on 30 November 2021. We have employees, just over 3,000 employees, and we sit with market cap on the 8th of April of just over 1.4 billion. Just about our different divisions. First of all, our biggest division or our main division is our timber division. TWK supplies wattle, eucalyptus and pine timber to our local and international markets. TWK cultivates about 37,000 hectares of forestry plantations in South Africa and also in Eswatini. Our newest acquisition we acquired was Peak Timbers that added another 20,000 hectares of standing timber. We also have mining timber sawmills, structural timber sawmills, and then we have treated timber pole plants. TWK export international markets from our wood chip facility in Richards Bay to Japan, China, Spain, and hopefully soon potentially to Europe because of what's happening in Ukraine. The Europe market needs more timber, and we hopefully going to move a lot of timber chips in the near future to the rest of Europe as well. We're selling around about 1.4 million tons of timber annually, and we're exporting between 600 and 700,000 tons of wood chips annually. Then we also have Sunshine Seedling, that's a large nursery business, building some of the highest quality timber and vegetable seedlings in South Africa. Our retail and mechanization division, we have 30 retail branches across Mpumalanga and KZN region. We also have 5 fertilizer plants that's selling around 285,000 tons of fertilizer annually. We also have organic plant called Growmore that's operating in KZN. Our mechanization division, part of the retail division, we sell mainly in Holland tractors and implements. We sell that in Mpumalanga and KZN. Our market share in KZN is about 39% August 2021 and 38% in Mpumalanga in 2021. Our grain division, we provide commodity strategic support and services to farmers by focusing on hedging and selling maize and soya beans. That's the biggest part of the grain division. And also enabling farmers to safely store and dry their grains in the TWK silos. We produce our own branded maize meal and also animal feeds. That's our animal feeds production facility called Arrow Feeds. And we have silo capacity is just over 170,000 tons that we can store. Our financial division, financial services, provides unique finance and insurance solutions to our agriculture and related industries. We provide crop and plantation insurance, personal and commercial insurance, medical aid. We also have our farmers, our seasonal credit facilities, and of course life insurance. We have customers across Mpumalanga, KZN, Western Cape, Eastern Cape, Free State, and Gauteng. That's mostly our insurance, that's the whole of South Africa. Production credit book grew strongly over the past year by 48.8% to just over 800 million, as it stands at the end of February. In February previous year, it was only 543 million. Our motors and tires industry segment consists of vehicle dealership and also Protea tires. The dealerships are based in Piet Retief, Ermelo and Standerton. We have 2 Toyota dealerships, 2 Isuzu dealerships, 2 Arval and GM dealerships, as well as a Hino dealership. We also have 5 commercial fueling stations, the fast food and convenience stores. At this stage, we're selling just over 10 million litres, but this business is also held for sale at the stage. Protea tires, we're selling tires and retreaded truck tires mainly for our local logistic companies. That's transporting coal, most of them. We have 2 tire retreaded factories and 4 retail outlets. Then the newest division that we just started last year, that's the renewable energy. TWK recognized the importance of the effect of the global climate change, and that's why we started investing in this as well. The Roospace Rental Group was formed, registered in South Africa and Eswatini, and it's an energy saving initiative company providing solar energy to its corporate clients. Signed leases, contracts with at this stage 8 malls. It's going to be 12 malls at the end of this period. From an environmental perspective, we're just going to have over 11.4 megawatts of solar projects. When 12 malls is finished, we offset approximately 18,000 tons of carbon emissions per annum in the first year of operation. Just to give you a little bit of an overview of the size of all the different divisions that we have. First of all, timber. You'll see timber is about 24% of the turnover revenue, but it forms about 38% of the earnings before tax. Retail is about 53% of our revenue, but forms about 40% of our EBITDA for the first 6 months. So it's growing. It's 9% of revenue and forms 5% EBITDA of the company. And our financial services is much smaller in revenue, but it forms 11% of our EBITDA. And our motors is 12% of our revenue and forms about 5%. And then the renewable energy is only 1%. At this stage, it's very small. We just give you a little bit of an overview of the size of the different divisions. I'm going to hand over to our FD, Mr. Eddie Fibers, who's going to go quickly through the figures for the first 6 months of TWK.
Thank you, Andre. A warm welcome to all the attendees of this presentation this afternoon. If we quickly look at the half-year results at a glance, we've published our interim results for the period ended 28 February 2022 yesterday. So this is based on a 6 months period. Revenue is at 4.9 billion. It's up by 30.6% from the previous period of 3.7 billion. EBITDA 428.9 million, up by 111.8% from 202.5 million. Profit after tax up by 175.5% to 246.7 million from a previous 89.5 million. Basic earnings per share 5.65, up by 127% from a 2.49 the previous period. Net asset value per share as at the end of February is at 50.24. That's up by 18.4% when compared to 28 February 2021, when it was at 42.42 cents. And when compared to the year-end results of August 2021, it was up by 8.4% from 46.36. When we look at our cash generated from operating activities before change in working capital, up by 100% to 459.7 million. So still strong cash generation from our operations. If we look at key financial indicators for the last 5 years, as well as the 6 months ending February, year-on-year good growth in terms of revenue. Last year, 2021 full year, this was at 8.9 billion rand, 4.9 at Feb. That give us a compound annual growth rate of 6.5% in terms of revenue growth. Operating profit, year-on-year growth. There was a decline in 2020 due to the COVID and the economical conditions we all are well aware of, but impressive improvements since then, especially for the last 6 months. That represent a compound annual growth rate of 10.9%. Profit after tax also shows our resilience, our ability to move quickly, and also our good diverse business model, and which help us to improve on our year-on-year results. Compound annual growth in terms of profit after tax to 17.3%. Headline earnings per share, compound annual growth of 9%. Headline earnings per share at Feb was at 5.66 rand, as mentioned a bit earlier. In August, full year, just over 5 rand. Also good growth on a year-on-year basis. We believe that our profits for the next 6 months will continue with the growth that we've experienced the last couple of years because of a continuous request and for our timber products, especially to the export markets. Share price statistics. Share price since August 2017 was at 13 Rand constant growth to 37.5 as of yesterday. We already saw levels of 44 Rand. But currently at this 37.50 Rand. Dividends per share, also year-on-year growth because of strong cash generation. 60 cent in August 2017, and we constantly grow our dividends to 1.14 Rand by the end of last year. That really presents a dividend cover of 4.4 for the August financial year. It was a bit higher during the August 2020 results due to the uncertainty of COVID. But we believe that with our strong cash generation, we will be able to maintain this type of levels around about 4 in terms of dividend cover. Going to hand you over again to Andre for strategy and wrap-up.
Thank you, Eric. Just quickly through the strategy. First of all, you'll see it's our stakeholders, and we say we strive to be the supplier of choice and the market of choice to our stakeholders. You'll see in the bottom, there is our values of growth, drive, renew, sustain, conserve, and develop. Then of our stakeholders, achieving sustainable growth of all our stakeholders. Then secondly, process excellence. That's where we have our values of renew, sustain, conserve, managing and optimizing process excellence and operating efficiencies. With our financial performance, we want to be the investment of choice to our shareholders, and then we also want to grow. That's a part of our values there. Increasing shareholder value for prudent investment in core business as well as strategic positions. Then our people and transformation, we want to be the employer of choice. There we have development as our value, ensuring the talent, people, talent, technology, and mainly key building blocks for a successful business. Then just to wrap up the lookout, TWK remains optimistic about the outlook of agriculture in South Africa. Despite challenging macroeconomic conditions, we really believe that agriculture is a sector that have done quite well in South Africa in the last few years for South Africa. But because of our diversity, we are not only on agricultural side, but we really believe that agriculture is going to be quite good in the future as well. The view of management is that the financial year ending August 2022 will significantly outperform the previous years and definitely be our best results once again. TWK remain positive of growth with a focus on projects across all our segments with expansions, acquisitions, mergers, and also strategic alliances. We will continue our efforts to optimize existing offerings, and then strategic outcomes are evaluated annually, and then TWK remain focused on delivering the company's strategic intent of growing profitability. From our side, thank you very much for the opportunity, and you are welcome to ask us some questions in the breakaway room that we can tell you a little bit more about our company.
Sorry, Marlies, you're on mute.
Sorry. Thank you, Andre and Eddie. You can now select the breakaway room you would like to join by clicking on the panel at the bottom of your screen.
Hi, everyone. We're just going to give it 15 or 20 seconds for people to filter in to this breakout room. If you've ended up in the Mpact one by mistake and you want to actually jump into TWK, if you just look down the bottom, you'll see the breakout rooms and you can switch back. And I see now that Bruce has joined us. And just a reminder, we've got Bruce Strong, CEO, we've got Brett Clark, CFO, and Valeska Klute, Group Head of Innovations, Research and Development. If you do have any questions, please type them in the chat function. Bruce, I might just kick off with the first one just to get the ball rolling here. We have a few people who seem to be a bit gun shy. But one of the things I wanted to talk about quickly was, can you just give us a sense of the regulatory environment and, you know, changes that have come in the last few years, or stuff that's on the horizon that's, you know, going to impact your customers, and, you know, how that translates into, you know, what you're doing in terms of seizing new opportunities, and maybe for Valeska as well, you know, what that means in terms of the research and innovation that to kind of get ahead of these changes that might be coming.
So I'll talk just generally, and Valeska can touch on extended producer responsibility, which has become a very key theme at the moment. In general, I'd say the regulatory environment it hasn't got any better. I mean, it's getting more onerous and more complicated. And that's both locally, but also abroad. I mean, we're seeing, just to give you an example, in European countries, for example, moves against certain lines of packaging, you know, talk of restrictions on products that have got a certain carbon footprint when it goes into imports. And so that's something that that's on the horizon that we're having to look at. In terms of EPR locally, we are beneficiary of that, and Valeska will touch on that just now. So I'd say generally, you know, the regulatory environment isn't getting easier. Having said that, what is becoming evident is unfortunately, it benefits bigger companies that have got the scale to deal with the regulatory changes. You know, I think it's very difficult for smaller businesses to navigate these regulatory changes, which is sadly a benefit for us being a larger corporate company in our sector, but not good for the economy generally. So I'd say on the whole, it's quite challenging. We have successfully navigated historically the various changes that have come. We also have key inputs into a number of regulations through our industry associations. You know, I'm the chairman of Packaging South Africa, which has had a key input into extended producer responsibility and other legislation. And via a number of other channels, we also give inputs. But maybe I could ask Valeska to talk more specifically about extended producer responsibility, which is really a hot topic now, and which is one which is sure to benefit our business because we are closing the loop. You know, the things that everybody's aspiring to do, we do as our core business. So Valeska, maybe you can just give a quick outline about what EPR is and how we're approaching that.
Certainly, Bruce. Thank you.
We've worked very closely with the market and actually the full value chain during the course of last year in preparation for compliance to the EPR regulations. And the big thing about EPR is that it's not up to an individual point in the value chain to ensure compliance, but it's really up to each party in the value chain to collectively ensure that we close the loop on materials that we use. We looked extensively at the design of materials, to ensure that when we collect and recycle materials, that the recycled materials go back into applications where it is a suitable raw material for that application. And with Mpact, for example, having a large shareholding in food packaging, it's very important for us to establish the...
You're on mute, Valeska.
Sorry.
Okay, yeah.
So closing the loop on raw materials for Mpact is very important, that we build the right competency in our business to be able to recommend the right applications for recycled materials into new packaging. This is especially important if we look at the food application side of packaging in South Africa. And when we look at packaging, it's also important to understand how we label packaging and whether systems exist locally to collect it and then to recycle it. So with Mpact being forward integrated into recycling, we're very well positioned to support the industry, to ensure that materials are collected, and then also to do research and development and understand what alternative uses there can be for materials beyond its primary useful life.
Bruce, another one, you referenced the kind of the current split between the paper and the plastic business currently. If we look out 3 to 5 years from now, would you expect that split to be roughly the same, or are you kind of trying to grow the plastics business to give a bit more balance to the paper business?
To be honest, the balance doesn't mean anything to us. I mean, we will exploit the opportunities that arise. And for example, at the moment, we're seeing tremendous opportunity in the rigid bins and crates business, and we're investing quite a lot of money, time, and effort in that business, which on a proportionate basis might see it grow greater, quicker than some of the paper businesses for the short term. So our strategy isn't based on a particular split one way or the other. It's really based on exploiting the opportunities that are out there. And what's becoming clearer certainly has become clearer in the recent past is that a lot of the bad press that plastic is getting is misplaced. It's not based on science. It's based on a lot of hype. And in many applications, I think it'll be proven scientifically in due course very shortly. Valeska is busy with a life cycle assessment analysis of all of our products, for example. And I think that life cycle assessment analysis will show that the carbon footprint of many of those plastics products is substantially better than paper products. So we don't have a specific target. It's really based on the strength of the sectors that we see, and we'd happily invest in either. It's not one or the other.
Okay. And then another question, if maybe Brett might want to take this one. The debt was up on the prior period, mainly due to the kind of the buyback. Is there a kind of a happy medium debt to equity that you guys like to focus on? And maybe a follow on to that is how you're thinking about financing debt as we kind of, approach this, higher interest rate environment. We've seen central banks all this week, doing 0.5% increases. The Reserve Bank here has already done it. Can you just give us a thoughts around that split and how you're kind of going to adapt to it moving forward?
Okay, thank you, Mark. Currently, our gearing ratio is at about 30%, which we're comfortable with, and we expect it to stay at sort of similar levels. Our debt may go up. You'll see in our financials, Bruce was talking about 700 million of growth capex that we're investing. And then each year we're investing probably another 700 million at the moment in either buildings, or if you refer to our slides in our previous presentation, or other capital projects within paper and plastics. So in the next year, we've got approved capex of about 1.5 billion of various types, and expect to spend just over 1 billion rand this year. So our debt will probably go up slightly in the next year or so. And then it'll start dropping off after that. At the moment, we're busy refinancing all our debt, and the interest rates are probably likely to be slightly lower than we're paying now. So there's a strong interest from the various banks to fund our debt facility. So that'll be done in the next 6 months, that we'll refinance probably all our debt facilities at slightly lower rates. And then generally as a policy, we tend to fix about between 30 and 40% of our interest rates going forward. So if interest rates jump significantly, at least part of our debt will be hedged, and the balance we leave unhedged.
Could I just add a comment, Mark, on the CapEx project? So the $1.5 billion isn't approved. That's basically the capital commitments that you disclose in your financial statements, which includes, the carryover, still the commitments already made, and those that are budgeted for the year ahead. So just to be clear, it's not necessarily a new approval of $1.5 billion.
Okay, no problem. I just want to touch on, since it is extremely current, the flooding in KZN. We've got a question here. To what extent do disruptions at South Africa ports have a knock-on effect for the fruit exporter guys? And then obviously that kind of flows back down the line to Mpact.
Yeah, so it's really, first of all, just to say that we are concerned about people in KZN, and we offer obviously our condolences to all those that have been severely affected. Our operations generally are not too bad. I mean, our major operations are operating. We've had a couple that have had some flooding, but at this stage it doesn't look that material, but we would obviously make an announcement if necessary in due course. In terms of the ports, it's clear that the ports have been stopped for now, and perhaps will be for some time. We had the same situation last year in the riots, where customers had to divert fruit that was picked and ready for shipping to other ports, or otherwise hold it. And we have seen fruit producers are pretty adept or skilled at managing that, but it is no doubt a concern. The general assessment we have at the moment of the KZN situation is many of the factories have decided to shut for the weekend, clean up, and then they'll start up early next week once they've done assessment of what the situation is on the ground.
Okay. Then a question around Caxton. They've obviously acquired a recent stake in you guys, and then another question about, would there be potential synergies, mixing the two businesses at some point in the future, or are they're operating in one segment and you're kind of more operating in another segment with different focuses? So maybe we'll just touch on that broadly.
Yeah, well, so I mean, I think it's public knowledge that Caxton own around 34% of the company, and the area where they're a customer of ours is in our cartonboard business. They're a customer of ours in that business, a little bit in the corrugated business, and some in the fast food packaging business. Yeah, so in terms of synergies, there's nothing obvious that I can think of myself. And any other details, I guess, would be best placed with Caxton.
Okay. Then another one here. Do you propose initiating running recycling for waste paper in the suburbs again? Question here says, it was an excellent way of getting rid of household paper waste efficiently.
Yeah, so, well, for those who have been around for some time, you'll recall we had our running recycler program in suburbs up until about 4 or 5 years ago. The reason why we stopped was actually because our main area was City of Johannesburg, where we serviced about 700,000 households, and the municipality went out on tender believing that they would be able to be paid for people to collect this waste, but actually most people tended to be paid, including us. We subsequently lost the contract to a small enterprise who it didn't work. I mean, we basically supported them for 6 months just out of good faith, and after that the system imploded. In the meantime, what's happened is the rise of waste pickers and reclaimers of that nature. They've filled the space, and so our efforts are around supporting their collection efforts and buyback from them and others, and that's perhaps how it will unfold now. There is a big drive from an industry point of view in terms of our industry waste management plans and our extended producer responsibility to actually formalize some of the activities of the waste pickers, of the reclaimers, and that will see quite an efficient system, I think, down the line. But we do have an extensive recycling network. I mean, not only households, but we service probably over 1,000 sites in one form or another across the country, industrial, shopping centers, and others collecting recyclables. we are seeing more and more recyclables end up at households because of e-commerce and home deliveries, of course.
And then another question for me, if I can. The Mpact business has now been moved to held for sale or discontinued operation. Can I just get a broader sense on your thoughts on M&A, whether that's acquiring businesses that would fit nicely into Mpact, or divesting some other stuff that maybe the outlook you're thinking is not too keen? Just in broad strokes, how you think of M&A over the next, let's say, 3 to 5 years.
So we have actively over the last 10 years considered many acquisition opportunities. We made a small acquisition at the end of last year in a recycling business, for example. So that's something that is ongoing. Our experience, though, is the best projects are the ones we do internally, because often when you're taking a plastics business, when you're buying a plastics business, you're often buying old kit, which needs to be recapitalized, and you get a new entrant into the market with new kit. In our own experience, if we put in a new machine, the power consumption is sometimes 30% of an old machine. So, one has to be a bit cautious about, especially in plastics businesses in that regard. But having said that, we are constantly on the lookout. But I think our core focus has been and will remain for the time being doing capital projects and developing capital projects which go beyond just buying off the shelf, but actually developing solutions. And that's an example is that the Lisu project in Piet Retief. We're working on a number of other things Valeska's got on her plate, and those we find to be a lot more sustainable and profitable. But we would look at acquisitions that come up from time to time. Just on sorry, the last point on that you mentioned about Mpact. One of the key aspects of the last years has been the portfolio optimization, is the way I'd put it. So, for example, we had the investment in our polymers business, which didn't work out, and we had to stop it in 2019. We've sort of got through that, and now we are building a new factory there to make bins and crates. So I think this discipline of, certainly, I must say we're pretty resolute, but at the same time, when a thing doesn't fit for whatever reason, that we can deal with it and move on to the things that are going to be in the front yard for the long term.
A question here, it says, SA price is still strong. The market, is it still tight on paper and plastic in terms of, getting feedstock, kind of managing this whole supply chain that's been disjointed for, the best part of 2.5 years. And from everything I read here, doesn't seem like it's going to resolve itself, kind of anytime soon. So just maybe a bit of commentary on, are you able to get price increases through to customers because, you're feeling it on your side, and just where the market is in terms of stock levels on your side and maybe on the customer side as well?
So, well, just referring back to our outlook statement and our presentation in March, the situation is the same. Things are tight. So I'd say things are tight. And of course, since then, the war has started in Ukraine. So that's maybe tightened things up even more. I think there's a concern, if I was to raise a concern, it is about the ability of customers to take the price increases. And we're not quite sure what the elasticity of demand is in different sectors, but that will be tested in the near future, because I think most people are seeing inflation now, some for the first time in many years, and how that manifests on the front end of the business is going to be evident in the next 3 to 4 months, I guess, in terms of demand.
Okay. And then if we can just switch back to R&D for a second. How do you guys think about R&D when you're budgeting for it? Do you look at it as a percentage of revenue? I don't know if this is maybe for Brett or for Valeska, or is it more kind of we have an opportunity or we're getting feedback from our customers and, the board okays, a specific budget to attack an opportunity, if I can say that?
Valeska, would you like to go? Shall I just give a quick overview and then you can add the detail? And we don't have a specific target, in terms of expenditure, but we are starting to more actively monitor a percentage of revenue attributable to newer products or, recently introduced or otherwise modified products, to give us some sense of the rate of renewal in our business. And it's new for us. In one of our businesses, for example, last year, 15% of the products, 15% of the revenue was from products that didn't exist in our business 3 years ago, which is quite a nice a benchmark. And I'm on a forum with a number of CEOs from other countries in the world, and they're talking 1 to 2%, is a good rate. So we are still wrestling with that, but Valeska can talk more to the process of identifying opportunities and how we go about that.
Bruce. Looking at innovation, research and development, our focus is really to develop solutions for our customers. Some of that may be in terms of our core business, in terms of products. Bruce mentioned that we've produced or developed quite a few products that didn't exist in the last couple of years or a few years ago. But then we also look at how we can create solutions. So we go beyond selling packaging to our customers to solving problems within their business. I can give you an interesting example where we look at the fruit sector, for example. Bruce mentioned our range of products that we offer into this sector. Now, if you look at the fact that we produce pallets, bulk plastic crates, we produce PET punnets, and on the paper side, for example, corrugated cartons and trays, and also paper-based punnets and bags. When we look at innovation, we want to unlock the value beyond selling these packaging units to our customers. And what we do is we develop packaging systems instead of selling packaging to them. And if we look at the fruit sector specifically, what we want to do is we want to keep fruit fresher for longer. Specifically, if we look at the large majority of fruit in South Africa being exported to overseas markets. We do this by developing ventilation systems to enhance the quality and improve the quality of the fruit. And in doing so, we then extend the shelf life of these products. And beyond that, by looking at the combination of packaging and how it interacts in its environment in the cold chain, we also have the opportunity then to actually reduce the carbon footprint of the solution that we offer to our customers. So this is just a simple example of one of the ways in which we create solutions to customers where we really move beyond selling specific packaging to them.
Great. And a question that I think maybe for Brett. FX impacts in the business, Brett. I mean, is a weak rand good for you? A strong rand good for you? You know, we've seen it kind of well below 15 and holding below 15 now recently. I'm just trying to get a rule of thumb of, you know, is it a major kind of driver of profitability on maybe the cost side of some of the input feedstock? I just want to get a sense of how, you know, a big spike in the rand either way it could impact the business.
What's probably best for us, Mark, is a stable rand. Just because when it's moving up and down, you never, you know, you don't want to put sudden price increases up or down. So our preference would be a stable rand, and but we benefit from a weaker rand. Would, you know, if there's competition from imports of our product. Most of our products are sold locally, but they are under some threat every now and then from imports. So it's better to have a weaker rand than a stronger rand from our side. We are doing a big capital expenditure program at the moment, so we are benefiting at the moment from the stronger rand in terms of acquiring some of the equipment Bruce was talking about earlier.
Okay, great. And we've got about, I think I got the heads up over about 3 minutes left. That might be down to 2 minutes now. Another question maybe for you, Brett. Is there any major seasonality in the business? We've got 1 minute left, so maybe just a quick comment on seasonality between the halves. Is that something people should look out for if they're new to the Mpact story, maybe haven't been on top of the results as much as other people in the last few years?
Our second half is generally up, say, 40% in the first half and 60% in the second half. So we generally benefit more in the second half. Our results are higher in the second half than in the first half.
Okay, that's good to know. That's a pretty decent split between half 60-40.
Yeah.
Okay. What will happen now is we're going to end this breakout room. It's going to end in the next probably 10-15 seconds, and then please stay with us. We're just going to move back to the main plenary, and we're going to have a quick wrap up with Mara-Lise. And thanks everybody who joined the Mpact breakout room today, and hopefully everybody learned something new.
Thank you, Mark.
Thanks, Mark.
Welcome, everyone. So this is the TWK room. I see, Andre, you guys actually say TWK. I've been practicing TWK all week, so I don't mess it up. And then you went with the Anglo version. So thanks for making my life slightly easier. Thanks for the presentation. And I think that the business is really interesting. It's something that's off the radar. I mean, if anyone's ever tried to find SENS announcements about it, they won't find one because you're not listed on the JSE. You're listed on the Cape Town Stock Exchange and also on A2X for secondary trading. So yeah, really interesting, very under the radar business. That's why I think we're excited to have you here. So just housekeeping for those who haven't been on one of these before, please send me the questions on the chat. Everyone will basically be able to see them. So don't send them just to me, rather send them to everyone so we can all learn from each other and see what's on your mind. Ibrahim, I believe you've sent some questions directly to Eddie. Please just retype them to everyone in the room, or if you're feeling particularly shy, you can send them directly to me. But I'm going to kick off with something that's top of mind from my side, having read the results that's just come out. So this export market for wood chips is incredibly fascinating. And I'm curious what has been driving, I mean, I think the export growth, I hope I'm not going to get this wrong, but I think it was 223% in this latest period was the number that I picked up from your report, which is just extraordinary. And in the second half of the year, you've got the kicker from, you know, the horrible things going on at the moment in Ukraine, because European pulp mills are looking for alternatives. They were being supplied by Russia. Now, obviously, with sanctions and just practicalities, that's not happening anymore or won't be happening anymore. So that's a huge win for you guys. But what's really interesting is that's actually still coming. That wasn't in these numbers, if I understand correctly. So what was driving the big jump in these recent numbers? And I mean, can we safely assume that what's going on in Europe is actually a really big deal for the TWK business?
If I can start off, thank you very much for the question. First of all, you know, the previous year was very low because of COVID. You know, the pulp prices were down and the pulp volumes was too high in the world. So the problem was that we didn't export much because of COVID. Now we're just back to the normal levels almost. Now we used to export about 600 to 700,000 tons, and that's what we predicting for this year. So we're actually only back to what we used to before COVID. But what's interesting is that the market is moving. You know, where we only exported to Asia in the past, now the markets of Europe have opened to us. And that's going to be a good thing for us, that we're not only exporting to Asia but also exporting to the Europe markets as well. And we really think that that the market is make a shift on for the long run, and not only for now but definitely for the long run. So we definitely benefited of what has happened in the Ukraine. It's never nice to say that we benefited out of something bad, but it definitely is benefiting us. And but we're only on the export side. But there's also the other markets in South Africa looking at structural timber, looking at poles. So the other markets is also doing very well, and the biggest drive is coming from our timber division, and then of course our retail mechanization division that's also doing very, very well because of the farmers, our primary producers are doing well. So they are also spending much more, and that's the biggest drive for at this stage, although all our divisions are doing much better. I don't know if Mr. Fibers want to add to that. I think that's fine.
Okay, so very much a base effect, but still going well, which is fantastic. I mean, that's what we want to be seen. It's certainly what your shareholders would want to be seen, and some good stuff in H2 coming up without a doubt. Something else that I want to ask you, just a high-level question to help people understand the business. Not everyone is familiar with this sector. I think everyone understands, you know, agriculture, and they think they know what it is, but it's a really complicated world unto itself, obviously. And so there's these rising commodity prices at the moment, and presumably that benefits the broader farming community. I mean, you guys have a grain business, so to the extent that that's going very well, you know, there's a direct participation there. I would imagine that there's kind of a knock-on that in general, if agriculture is doing well, that's good news for your businesses, just based on where they are. Silly things like, you know, where the motor dealerships might be. Would it be right to say that there's this kind of exposure to what I would broadly call the farming community? And for shareholders to kind of understand the business better, what commodities would they want to see running hard to then assume that that's good news for TWK?
Well, I think first of all, to understand our business model is that we on lend to our farmers or our primary producers. That means that we have funding from a source of commercial banks and on lent to the farmers. And that's really based on our business model. By that, they are able to buy their products through the network of our 30 odd trade branches spread through KwaZulu-Natal and Mpumalanga. So the syndication loan agreement is from ABSA, Standard Bank and FNB. So that gives us a broad base of funding which is committed, and by that we are able to support our farmers. Why that is important is that even with rising fertilizer prices or fuel prices, we will be able to support our farmers to plant their crops. So what's important from an investor perspective is to understand the necessary requirement for food security and the production of food security. I mean, we know that it is a problem, and that will be a drive for producing of food, and we are able to give the necessary funding to our farmers for them to be able to produce. So that's a big drive. And if we've looked at the impact presentation just earlier, the drive for packaging, and there's definitely also a drive to a more greener packaging, and that's where most of or some of our products is currently going for the greener packaging material instead of only the plastic. So that drive will definitely benefit us as well. And so yes, currently the fertilizer prices, fuel prices is high. That will put the farmers for the new season under pressure, profit pressure. But I think we should keep in mind that for the last 2 years, or the current season as well, the crop yields is exceptionally well as the grain prices. So the farmers did benefit from that, and we believe that they will have some margin pressure for the now as the prices increase, but for the farmers, for the clever farmers, they will be able to buffer this increases in the input costs.
Very interesting. Sorry, Andre, do you want to add to that, or can I?
Yeah, definitely. And I think the biggest concern for us is not the security of the products, but more the price of what is going to cost. And it's only your lowest income that's going to be under real pressure to buy food, because the input cost is rising. And then also, if you're looking at maize meal, the maize meal price have to rise. And that puts a huge burden on the people that really are the most vulnerable.
Yeah, absolutely. Something I think we're all watching closely. So the questions are coming through directly to me, thick and fast, which is fine. It's no problem if they're asked privately. So I think let's try to get through as many of them as we can. I'm going to go with just on the sort of margin point and the pricing pressure and all of that. The question is, other than fertilizer price increases, how did you manage to expand the margins in your retail business? Assuming that was the case, excluding the fertilizer price increases.
Yeah, definitely the fertilizer prices, the margins in the fertilizer prices was definitely better. But now to get fertilizer and specifics, looking at certain products from fertilizer, that's the main problem at this stage. And you're seeing where the international prices of fertilizers is going, then it really is a worrying factor for us. But right through our business in the retail, it's not only the margin, but it's also the volume that was sold. So it's also revenue and margin, but definitely there is better margins, and the new prices are coming through almost every product that we're selling, and all the suppliers is just putting new prices. And if you still have stock at old prices, then normally there's a little bit of a better margin, and that's where the bit of the better margin. But we also have a lot of revenue that growth as well, and market penetration.
Fantastic, thank you. That's very interesting. So a couple of people have now messaged me and said or asked, are you considering a JSE listing? I suppose that question had to come today. Or are you happy with where you are currently in your listing environment?
Yeah, currently we are happy. I think in terms of our size and also the free float, in terms of our current structure, we are happy. But it's definitely not off the radar going forward as we grow and as in the way we grow our market cap. And if we are able to increase free float, like I just said, then it will definitely be on the radar going forward further in the future.
Yeah, brilliant. I'm going to send a message to Easy Equities as well and tell them to get on with execution on Cape Town Stock Exchange, because it seems there are some people who are quite keen to pull the trigger on an investment in TWK, which is nice to see in the comments that I'm getting. So there's another couple of questions here around cash flows and cyclicality, which I think is important. We had Afrimat on a few Unlock the Stocks ago, and they're best known for managing the cyclicality of their business, I suppose, and trying to reduce it. To what extent have you done the same with the sort of, and it looks like you're doing that, by going into other business lines and other divisions. Now, how cyclical is the business really? And then linked to that, perhaps just a quick note around cash flows. I think it's the H2 every year the cash comes in, and H1 it kind of goes out, if I had a look at your latest results in the previous full year. So perhaps if we could just spend maybe 2-3 minutes just on the cyclicality of the business.
Yeah, so a very good question, and that's what I've mentioned a bit earlier, is that in terms of our business model, we on lend to our farmers for them to produce their crop. So normally during the first quarter, first half of the year, the on lending is on its high. So the production season normally starts from October, then it starts to peak November, December, January, February, and March. Then the producers will start to harvest their crops, and by then repay their debt. And then on the back end, we start to pay back on that revolving loan facilities to the banks. So normally in February, our gearing levels will be on its highest, and then dramatically down by August. So that's how the business model works. It works well because with their funding, they can the farmers can only buy through our network of stores. So there's a double win for TWK. We only have really good farmers. We always say we are in a very high rainfall area in Mpumalanga and Natal, so crops very good. So we are not linked to high risk of only certain type of farmers or potential to or prone to high drought areas. So and that's really effective, and that's why our syndication loan agreements is very effective and fits in very well with our business model.
Yeah, so debtors is mostly in our summer producing areas, but we're doing our business like in fertilizer. We also have a plant in the Cape, and so that's a winter producing area. So we're selling fertilizer not only in summer time, but also in winter time to try and make a difference, because mostly it's in retail that where the big seasonal changes is. But in timber, it's not the same. And actually, our timber is actually doing much better the last 6 months than the first 6 months, while our retail is mostly performing the first 6 months when it's the input season for our summer crop. But we are moving, like I said, with the fertilizers on to the winter side in Cape Town as well.
Thank you. Then I've got a tough question, and we like to ask those two on Unlock the Stock. We don't avoid anything, but don't worry, I'm sure there's good answers for it. So One of the attendees was just asking, how is management incentivized to act in the shareholders' best interest? So it's always a good question in any investment. What is the alignment with the management team? How do you ensure that that's in place?
I think in most of the companies, there's always your basic kind of salary, and then there's the bonus you have, and then the long term. And the long term is always in shares. So if to align, specifically to align management with shareholders, is the long term shares. So we, our senior management and even middle management is incentivized with shares, but not diluting shares. That is also that we're not issuing new shares, but that there is shares available at this stage in the portfolio that being issued to employees to make sure that they align with shareholders. And then sometimes it's not that they have to take all the shares, they can also take the difference in the growth of the shares. And most of them are doing that. They're not taking the shares itself, but taking the difference in the growth of the share.
The benefit of being listed, of course, you can use those shares for incentivization and alignment, which is great. We've got about 5 minutes left. So I've got a question here around government services. I'm not surprised this has come up. How dependent are you on government services, water, electricity, road infrastructure? I mean, we're all, I suppose, very dependent on this, but how do you think about this as a risk for your business? I mean, the wood chip export's probably the most important thing. That's in Richards Bay. Maybe just a minute or two on how you think about that. And are there any major issues that you're facing with this?
Now, there's definitely challenges in that, even because we are mostly in the rural areas, so we're trying to help the municipalities, and we have our solar systems that we're actually putting electricity for free in some of our smaller towns to help the municipality into the grid and so on. But yeah, we're trying to work with them and see how we can help and assist. You mentioned specifically most of the places we have solar, and then we have generators, so that we can, if the system is down, that we can still operate and make sure that our business is going according to plan. The problem is actually in Richards Bay, where we really need big electricity demand. It's not, you have to put up a very huge plant for solar and so on, so we cannot run that. But at this stage, we don't have too much problems with the electricity side. We more have biggest problems and challenges is more on the port itself. So we are in discussions weekly almost to make sure that we get the efficiencies at the port much better than it is at this stage.
Fantastic. I want to squeeze one more question in. So the way you do the lending to farmers and associated businesses, these syndicated loans, how does that work in a rising interest rate environment? I mean, is it like a bank where you'll make more money if interest rates go up, or what would that exposure actually be?
So the borrowings from the banks is prime rate linked, and then also the on lending side is prime rate linked. So we will not make more money out of our farmers, because of the increase of the funding. In the past, we were only reliant on the land bank for funding, and over time it became more and more expensive. But in recent years, and actually in the last month, we took land bank out completely out of that portfolio by adding ABSA at more favorable interest rates. So because of that, TWK will benefit. But normally, yes, if there's an increase or a decrease, we will just pass it on to our producers.
Yeah, that makes sense. And they would have protected you on the way down as well in previous years. I have a question around the farmers' direct ownership of TWK. So maybe that can be the last one, and I think we're out of time. There's two businesses. One can only be owned, or two types of shares, right? One can only be owned by farmers and one can be owned by anyone. Is that an accurate summary? And to what extent practically are there any issues there? Who's actually running it? How does voting work? Any comments on that, just for those who don't have familiarity with the structure?
Yeah, so the farmers portion is only, that's a company on its own, and they have the shares in that company. And that company is only having shares in TWK investments. So the farmers can own investments and they can, but unfortunately it's only the farmers that can have, let's say, the holding company have shares there. But the only thing is it's only the biggest shareholder in investments at this stage. So it's just that the farmers have a shareholding in that company that have shares in investments. But investments is totally run, so they have no say in what's happening in pricing or anything like that in the company itself. It's just that they are shareholders and they are one of the biggest shareholders in TWK investments.
Okay, fantastic. Thank you.
Currently,
sorry, go ahead.
Yeah, just maybe to add on that, there is currently a drive to see how we can increase the liquidity on the shares of TWK investments, and by that we will have to look at the free float, and by that then look at the percentage held by TWK holdings in TWK investments. So it is something that we will have to look at strategically going forward.
Fantastic. I see this is closing in just over 30 seconds. So from my side, this is a really interesting company, genuinely. I'm not just saying that. And I know free float, it will be great to see that start to come through, as I know liquidity is one of the challenges. But it just shows there are some real gems if you start to scratch on the more interesting exchanges. And sometimes if you scratch on a different exchange as well. So Andre, Eddie, I just wanted to thank you for your time today and for taking the time to speak to your potential investors and maybe some current ones. And thank you for being on Unlock the Stock, and thank you as well to our attendees. I hope you learned a lot, because I know that I certainly did.
Thank you.
Thank you to everyone that has participated in Unlock the Stock today. We have seen good participation numbers and interactive breakaway room sessions. A special thank you to Bruce, Brett and Valeska, as well as Andre and Eddie for making the time in their busy schedules to support this retail investor platform. We hope you have enjoyed this event, and if you would like to listen to it again, it will be on Keyter Rech Investor Solutions YouTube channel later this afternoon. Please join us on 26 May 2022 at 12 o'clock for next month's Unlock the Stock event with Calgro M3 as one of our guests. Goodbye.